Hey Tyler, how's it going today?
I'm good. Thanks, Andreas, for having me.
Great. We had a couple questions I wanted to ask you just so we can inform some, first-time home buyers as well as other people trying to get into the market. A lot of changes happened at the end of 2024. Can
hmm
you talk to us about the changes, specifically the new changes that came about on December 15th?
Sure. Yeah. The biggest one is for insured mortgages. So less than 20% down. Used to have the limit as $1 million. You couldn't purchase above 1 million and put less than 20% down. Now you can do less than 20% down up to 1.5 million. So
Right.
the min down payment now on 100 on 1.2 on 1.5 million is $125,000.
Wow. Okay. So
So that's
pretty big difference there.
seismic change. Have I seen anyone do it yet? No. Uh, but as you can imagine, the default insurance premium that comes with putting less than 20% down at that price point is quite substantial. I mean, you're
Right.
talking about probably like 40 to $50,000
Right.
of insurance premium. So if you're putting 125,000 down, instantly you're losing that 40 to 50K because of the insurance premium. So
Right.
there's some downside to that. So I do think this is going to better favor that lower 1.1, 1.2 price point. I don't think we're going to see people going up to 1.5 to
Right.
access.
And then the other change we have on December
Yes,
15th was in terms of the 30-year amortization.
correct. On first
So
time
can you
home
talk a little
buyers.
bit of that?
Yeah, so first time home buyers now can do a 30-year amortization on less than 20% down, which is amazing. So it helps with cash flow, helps improve buying power.
Right. And what are some of the pros and cons you might see with that as a first-time home buyer instead of going with the 25-year amortization and jumping in right away
Yeah.
and using that?
Yeah, I would probably endorse clients to use the 30-year for cash flow purposes, especially in a higher interest rate environment. It's just gonna you're gonna lower your payment. Like what you're gonna borrow is probably gonna increase by 10% at least by pushing out the amortization to 30 years. So I'm a big fan of it because you can always increase your payment or accelerate your payment to cut down the amortization in the future
Right.
if you want.
Right. Awesome.
Mhm.
And so we have another Bank of Canada announcement coming up. First one of
Yeah.
2025 on the 29th. How far down do you see the Bank of Canada going down this year? We've gone down 50 basis points on the last one. What are you forecasting for this year?
Yeah, I mean, I just took a look at the bank economist reports on this. Most are thinking about another percent in cuts. So by the end of
Another
this
percent.
year, the current overnight rate by the Bank of Canada is 3.25%. It's probably going to be 2.25 by the end of the year.
Wow. So pretty big difference there. And then uh, based on each quarter point, we're looking at what, around 16 to $20 per 100,000, something like
Yeah,
that.
it's like a 13 to 15 bucks per 100K.
Right.
So if you got
So
a yeah. Yeah, go ahead.
that'll be a pretty big change then, I guess, then for people if we're going down one whole point, right? Especially
Oh,
considering a lot of mortgages were in 5 and 6 about a year ago.
100%. Like, I mean, this is why I'm trying to endorse people to take that variable rate product right now because based upon this prognosis. Now, I mean, economists have been wrong very often
Right,
the
right.
past couple of years, but I think that this is very much impacted. Like, it's already kind of built in or expected that we have to go down this far to start re-stimulating the economy a little bit.
Hmm.
Because even at 3.25% with the Bank of Canada's overnight rate, it's still in restricted territory. So, I mean, even if you have a variable rate that's a 0.25%, 0.5% above current fixed rates, it's likely going to be lower than any prevailing fixed rate by the end of this year.
Right, right. Another change that happened is in regard to switching mortgages. So they're not being stress tested again. I know that sounds like a lot of words for some people. Can you kind of break that down a little bit to make it easier to understand?
Yeah, sure. So right now, if you buy a new place, if you say you're quoted at a rate of 4.5%, you actually have to qualify for that mortgage at 6.5%. So what is happening is, with the stress test removed on when you're coming up for renewal and you want to transfer your mortgage to a different lender for a better rate, you no longer have to face that stress test. So if they're offering you a 4.5% rate, you're going to qualify at 4.5%, which is
Right.
a big advantage because it'll make qualifying easier to move you.
Yeah, and I guess if people would have changes in their salary or debt and that kind of things in the between those two things, it
Totally.
helps out a lot more for them. And lastly, I'll let you go after this, but can you give some advice on a first-time home buyer trying to break into the market? What's like the first step that they should be doing to look into getting to the market?
Yeah, good question. I'm gonna make it easy. Talk to me. Talk to
All
me
right.
for just because you want to get that pre-approval first. You want to know what you can borrow before you take that to your realtor. You don't want to waste their time and be looking for stuff beyond your budget or even the payments are too much. So that's the first step.
Awesome. Awesome. Well, thank you very much, Tyler. And I'll put your information there so people could talk to you when they want to look into breaking into the market.
Perfect. Thanks,
Thank you
Andreas.
very much.